What's going on YouTube, and welcome back to another Tire Trades video. Today I'm going to be breaking down my month of September. We did 6.8% this month, so again a grand total of 6.8%. Again, not the best month. Last month we made again 7%. However, I am consistently profitable. I'm showing it to you guys here, risking around 0.55 to 1% per trade. Again, over these last 2 months, I've managed to pass a live 100k funded Ftmo account. But right now we are in a little bit of a drawdown in the funded stage. So again, for the last trade of September, well, we took some losses. We went to minus 1.7%. And then obviously today we got a nice little winner to increase that buffer to around a minus 1%. So yeah, I'm going to break down today's trades and also the last few losses as well. I think it's really important for you guys to understand how I lose and how I handle my losses. Because at the end of the day, guys, this is trading. Like, you are going to lose and you need to know how to accept losses as they come, okay? There is no 100% win rate strategy. It is out of your control. Like, it is inevitable. You have to lose, and you have to be willing to accept to lose if you want to become a profitable trader. If you cannot accept losing, then I'm sorry, guys, you will never become a profitable trader. That is just the reality of trading, okay? Anyway, guys, let's just dive straight into the metrics. As you can see here, net total P&L for the last 2 months, $17,800. It sounds crazy, but yeah, generally, guys, like, obviously I made 15%, so that's 15k, right, on a 100k account. So yeah, that's why it's this level here. Obviously I was in a bit of a drawdown previously, and that's why it's a bit over. So it's around like 17,800. But yeah, the metrics are great. Day win rate is 66%. So again, I have 20 wins so far and 10 losses. Profit factor is over 2.62, which is great. Trade win percentage is around 56%. So again, metrics are looking healthy. All the signs showing that I'm a profitable trader. Again, my Zeller score is 87. My equity curve is really good. As you can see, my wins really outweigh my losses. This is how a profitable trader's P&L should look like, okay? Guys, make sure you are journaling your trades. I use personally Trade Zeller. It gives me really detailed metrics. You could use Notion, any form of journal where you're actually tracking your data. It's so important to have this, because you can now, it will just help you with your psychology. You can now have the data and be like, all right, my strategy works. I know that if I stick to my trading plan and follow the steps, even on days when I lose, let's say 2 back-to-back days in a row, like here, for example, I lost on Thursday and I lost on Monday. Even though I'm down minus 1.7% on my funded account, I know because of my data, I am pretty confident that my next trade will be a winner, and that eventually, like, I will start to pick up some wins, and the wins will outweigh those losses. So remember, guys, if you are risking 1% per trade, if you're risking $1,000, right, and you lose 2 trades in a row, okay, all it takes is for your next trade to be a winner, and then you're back to break even, okay? If you've got a 1 to 2 risk to reward ratio, that's all it takes, okay? So even with 2 losses, 1 win can outweigh all of those losses by literally just sticking to strict risk management. This is why it's so important to accept losses as they come. Once you lose, walk away from the computer. Just don't even touch your screen, your computer. Just close your laptop and leave, okay? You need to be at peace with losses, and you need to accept them as they come. This is so important, guys, and this is why I'm repeating myself, because if you can't physically be disciplined enough to stop yourself from trading again on the same day, then you will not become a profitable trader. I challenge you to trading just 1 trade per day for the next 30 days, making sure that you stick to 100% of your trading plan and strategy. Like, you cannot miss any confluence. You can only take 1 trade a day. If you do this, guys, I promise you, it will teach you a lot about yourself, psychologically wise, and also it will make you become a more precise and better trader. You will be more patient because you know you only have this 1 chance to pull the trigger, okay? You will also have to make sure and not be afraid to lose, okay? Once you have all your confluences, you have to be at peace with losing that trade, okay? Even if you have everything. If everything is checked and ticked, you cannot be scared of pulling the trigger. If you see all your confluences and the setup is there, then take the trade. Like, that is your sign. Go, 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 you know? You have this 1 chance, and if it flops, you walk away. You come back tomorrow. You refine your edge. You try and be more patient. You know, you learn from it. Did I make a trading error? Did I stick to my plan? If you stuck to your plan and all the confluences and you lost, that's a great trade. Remember, guys, there is no 100% win rate strategy. So if you take losses, but you followed your trading plan, that is a win. That is a massive win, okay? So I need you guys to understand this, all right? Once you do, you will be at peace with losses. As you can see here, for the month of August, I took a ton of losses, took quite a lot of losses. Even one of these weeks were red, okay? However, I knew if I stuck to my strategy, I trust my data, I know these wins that come will outweigh all of these losses. So I'm not even phased by it. Same thing in September. Okay, sure, the first week was great, 2.4K. Next week, slight loss, 500. I wasn't phased at all. The week after, 5K. This was my best trading week. Price action was amazing. So I capitalized. And then again, the last 2 weeks of September, not that great. Price action was a bit choppy. But again, look at the losses in comparison to the wins. Way smaller, guys, okay? If you have good risk management, this is how you should be able to take losses, okay? Anyway, guys, enough of me ranting. It's so important though I drill this into you, because if you are serious about trading and want to become better, you need to understand that less is more. Like revenge trading, all of this stuff, not being able to handle losses, this is what's holding you back from becoming the profitable trader, okay? It's not like anything else in life, like where the more you look at, the more you study on the charts, the more hours you put in on the charts, the better you'll become at trading. No, that's not how it works. The less you do, the more you gain. You have to be more precise and patient and disciplined with your entries, and learn that one trade a day is all it takes to become very, very profitable. All of these small wins will stack up. Again, the month of September, I've made 6.8%. Okay, sure, I'm not the best trader. I'm making, some little errors here and there as well on top of that. However, if you're doing back-to-back 6%, 7% months, I mean, all it takes, even on a 100K account, that's 7K, that's $7,000, Obviously, minus profit splits, it's still like around $5,000. That's a life-changing money, you could do a lot with that. Now, imagine you have 3, 4, 5 accounts. All you got to do, guys, is compound your capital, and you are laughing to the bank, okay? Anyway, that's enough of the psychological side of trading. However, these are my metrics for the month of September. This is what it's looking like. Anyway, let's just dive straight into the trades now and see the losses that I took. All right, guys. So again, this was on the Thursday. So this was my main loss. So as you can see here, price is kind of bearish now on gold. On the long term, if you zoom out on the 4 hourly, it's very, very bullish. But as you can see here, internally, we're quite bearish. Okay, so what I was looking for, well, I was waiting for a 4-hour swing liquidity to get swept. So as you can see here, we had the kind of break of favor here. We had liquidity resting below this swing. Actually here, it didn't candle close below the swing, so there was no breaks down here. Price pumped up, it kept pushing back down. Then it gave an entry here. I didn't enter here. This would have been the trade if I actually add another thing here with a 30 pip stop loss. Price was very volatile. You can see this is a 30 pip stop loss. So I would have done something like this. This would have hit a 1 to 2, or just shy of a 1 to 2 trade. Okay, so yeah, just shy of a 1 to 2. So this was the actual trade my mentor took, and I should have taken, because I didn't know if this trade was valid, because as well we were so internally bearish. However, because we didn't even have a breakdown below the swing, this was still a valid buy setup, and I should have taken the trade here. However, I missed out. No worries, I was patient. I waited again for price to create a new break in my favor, so that's a new break in favor. As you can see, it came down. It swept 4-hour liquidity as well here, and it had this massive reaction from it. Had a massive pullback, but as you can see, all of these candles, each candle was like 70 pips, so mad volume, very, very volatile. I should have known better. I entered here because of FOMO. Again, my stop loss didn't make sense. It should have been like here to cover, and even if it was there, I would have gotten taken out because of how volatile the markets were. So I took an L on this trade. I just closed my laptop, and that was it for the day. That was the discipline I had, okay? I took a $1,000 L on this trade, and I just had to walk away. And then as you can see here, I mean, price eventually, like I said, it had that break in my favor. Because there's a break here to the upside, there's liquidity resting below. So price then grabbed this liquidity below. And again, this is the reaction off that 4-hour swing as well. So grab liquidity, it had a break to the upside here. And then again, it gave me a level of entry. Now my stop loss would have made sense. So my stop loss wouldn't have been like flipping 70 pips here. It would have been literally from here to here, which would have been around 40 pips, which is great. And this would have got my 1 to 2, and I would have won, okay, if I was a bit more patient. But we learned from it, guys, okay? I FOMO'd in here. I know this was a trader error. I didn't even realize this setup was kind of valid. I was a bit unsure, so that's why I missed this one here. However, this was a very valid buy, and I just didn't capitalize on that. And that's fine. Like I said, I wasn't willing to take this buy setup because I already lost 1% for the day. Okay, you need to be very strict with your risk management, and you know, just understand that there's going to be tomorrow to trade. So yeah, that was it, guys. I lost that trade on the Thursday. Then again, obviously I did not trade Friday. So moving on to Monday, this was the trade setup. So as you can see here, price again reverted back to being bullish again on gold. So now we're very, very bullish. Again, I was looking for buys, as you can see here, after 1:30 a.m. 1:30 p.m. sorry, UK time, which is 8:30 a.m. EST. That's when I wait for my liquidity grab. Liquidity got swept here, tapped into a 5-minute order block, and again gave us that nice reaction. As you can see here, it was kind of choppy on Mondays. Usually Mondays are a really bad day, and the market is still kind of undecided on where it wants to go. So I should have known better. I should have waited for greater confirmation. However, I saw price obviously wicking up to the upside here, but it didn't candle close above the level. So I took it with a very tight stop loss. I should have known as well, these big candles printing, it was a risk to take the buy. However, I was willing to accept the risk. And yeah, I just got stopped out. Again, very, very choppy. Ideally, I should have entered probably around like here when price was breaking this level. But no matter what, as you can see, price was very, very sideways. It wasn't really moving. So regardless, it should have been a no trade day, if anything. However, I hold my hand up. It's something I could have worked on. The only thing I can say that I could have done better was being a bit more patient and waited for price to maybe properly candle close above this level here, because this is a clear area of resistance. As you can see here, this is a level of serious resistance. Okay, so once price finally broke above and candle closed on the 5-minute, that should have been my entry. I could have gotten maybe like a TP1 and took partials, and then it reversed, and then I would have gotten taken out break even. So that could have been the potential trade. However, again, it was very choppy Monday. In future, don't even trade Mondays at all, or just again get extra confidence. You know what I mean? Just even if price is kind of like looking like it's breaking, but remember, yeah, I have to wait for the 5-minute candle close. So yeah, I was just a bit impatient, and again, that's something I can learn from. All right, so that was my loss on the Monday. Moving on now, Tuesday, so that's today. This was the buy that I took on gold. So as you can see here, price again, we had this massive drop down, but again, this was a massive liquidity grab. If you go to the 4-hour, let me just show you on the 4-hour. Price only closed, okay, candle closed below, but again, this is only one break to the downside. For me, because this is only one break to the downside, this is just a liquidity grab, okay? If it done this, where, you know, it kind of went like this, and then candle closed below this level here, that for me is 2 breaks to the downside. So this will be my second break. And now price is actually trending bearish, okay? But we didn't get that, okay? Gold is still on a massive tear. Look at the uptrend gold is on, okay? People that are trying to short gold, I'm telling you now, just stop. You're getting wrecked, okay? Intraday traders, yes, it's risky to take a, you know, counter trend trade, and I would not advise that. I'll just wait for price to come to these discounted levels, and then you look for the buy, okay? There is no signs of bearishness. I'm telling you now, understand market structure. Once you understand market structure, you will know that if price is doing this now and creating multiple breaks down on the 4-hourly, you know, now we're actually bearish, okay? But until that's happening, man, look, this is even a proper swing low here as well. Price didn't even get nowhere near this level. So for me, you just be patient and you wait for the buy, okay? So anyways, price swept that liquidity here. It had a nice reaction off it. So if we go down to the 5 minutes, as you can see here, from that reaction off it, I mean, we had multiple breaks to the upside. So that's a break to the upside here, another break to the upside, multiple breaks to the upside. We are creating structure. This is now bullish, okay? So from bearish, we have now gone to bullishness, okay? So obviously I'm looking for buys. I'm waiting for the liquidity grab after 8:30 a.m. EST. That's what I've always been taught. That's like just how I've been taught to trade. And again, I just mechanically do that. So it just helps me with understanding entries and stuff. So again, this is 5-minute order block here. Price didn't really tap into that order block. However, you can kind of see it just grabs all of this chopped liquidity. So a big pull to the downside. Again, this was at 1:30. So a big liquidity grab. Didn't really tap into that kind of order block. On my broker, I think it did. That's why I took the trade. And then, yeah, as you can see, price pumped up. However, look at this candle. I mean, bruh, if you're trying to enter here, I mean, you've got a 70 pip stop loss. Gold is super volatile, or 80 pip stop loss. It doesn't make sense. So what I do is I'm waiting for a better level. So even if when price breaks this level here, I know that, I mean, I can't enter here. It's too risky, right? So what I do is I wait for a little pullback. This already is a new break of structure. So break of structure. We have liquidity resting below here. So I was anticipating price to swipe this liquidity tap in here and then give me a reaction and a better level. However, it already seemed to be, you know, have grabbed liquidity. It's come down now. It's pumped back up. It's come down again. And again, now it's giving me a better level for entry. So now my stop loss would have made sense. Okay, so I entered here. Again, my stop loss was around 40 pips. Sorry guys, my camera just died on me. But as I was saying, this level actually made more sense. Again, we had that kind of pullback. It retested again this level here. It's creating higher lows. So again, I was confident that this is a lot more acceptable stop loss from here to here. You know, this would have been what, around 45 pips. So again, a lot more the stop loss is covered a lot more. So that was my trade. Again, I entered a little bit higher on the 1 minute because I just wanted to make sure that the 1 minute closed above the 50 EMA. So if I can find where price is on the 1 minute, there we go. Okay, cool. So as you can see on the 1 minute, we had that gray box, which is the PA level. But again, I waited for a 1 minute candle closure. So again, once I had that 1 minute candle closure above the 50 EMA, and I saw that price is now trading above the 50 EMA on the 1 minute, I was like, cool, this is my, you know, go-to time to initiate the trade. So I could have had a bit of a wider stop, like 50 something pips, but I wanted to keep it around 45 pips. I trusted my analysis. I knew there's obviously a chance of it reversing, but that's the game we play, man. At the end of the day, we're taking calculated risks, and the risk today paid off. So that was the trade. Again, Monday, I rode it up for about a 1 to 2.35. So it's a really good trade because as you can see, price, if you look at, like I said, on the 4 hour, again, we had this massive pull down. So there was a lot of imbalance. I knew that there was, I mean, price, if you look at like the 15 minute, for example, look, there's a lot of imbalance. I was like, there's no order blocks here stopping price from mooning. So again, I rode this to like a 1 to 2.3, I think. I closed it here just at the top before I pushed down because news was coming out. I don't know if my prop firm allows for me to trade through news. I think it does, but I was like, you know what? I'm not even risking that. I'm not risking the slip, anything like that. So I was like, let me just exit. So got a 1 to 2.3, which is a great trade for me. Again, there's nothing here stopping price from, you know, continuing to rally. And I know look, at the end, price went up to like a 1 to 7.7. So, I mean, I could have held it, but this is all hindsight. I always stick to my rules. I'm always aiming for a 1 to 2. I'm not trying to skew my data, like, you know what I mean? But yeah, that was the trade of today. And again, like I said, now we're back up to minus 1%, minus 1,000 on my 100K account. So it just shows you with good risk management, even taking 2 losses back to back, because I didn't revenge trade or, you know, over trade on those days, I didn't have like a minus 2% or minus 3% day. All it takes now is for me to literally take 1 trade again to get myself back up. And what I'm doing now as well is I reduce my risk. So I can see the market's still very volatile and choppy. Okay, I use 0.5% risk. Be smart about it. If I'm in drawdown, I'm trying to get, my goal now is just get back to 0. Okay, that's all I want to do. Get back to 0. Stack these small wins again. Trust your strategy. And just like, if you know price is really volatile and I have a bigger stop loss, yeah, cool. Just reduce your lot size. Like, I'm not stupid. Like, you have to be mechanical, but at the same time, you have to be smart. If the market is showing that it's very, very volatile and choppy, reduce your risk. Like, I mean, for me, it's more psychological. I'd rather do a slower grind back up to 0 and make sure that I'm not putting my account in a deep, deep drawdown. I want to save this account as much as possible. Yeah, cool. I could have risked 1,000 today and, you know, be instantly probably in profit even. However, the smart thing to do is, for me, my rules anyways, anytime I go into minus in drawdown, I always reduce my risk to 0.5 and I slowly grind away back to 0. Once I'm at 0, I can then look to increase my risk to 1%, or again, just keep it 0.5 and then make myself have a buffer to around 1%. And then once I have 1% profit on that account, then I can look to, you know, trade 1% again. You know, psychologically, I think I find that helps me a lot. There's less pressure on my trading. I don't like seeing myself being in deep drawdown. I think it psychologically it is a killer. So I prefer to start to stack these small little wins, grind your way back to, you know, a good level. And then again, when I know conditions are good, I can risk that 1% and get this damn payout. So that's the goal, guys, with this account. Like I said, I'm being very conservative with my trades now on this 100K funded. Obviously, it's not ideal that the first trade I take on it is an L and then the next trade is another L. However, we remain calm. We understand it's part of the game. Losses are part of the game. It's out of your control. As long as you're trusting your strategy and your edge, you will come out on the other side as a profitable trader with patience and discipline. So yeah, those are my best tips, guys. Again, hope you enjoyed the little rant at the beginning, but trust me, it's so important. Like, it's all psychology. Like, there's no secret sauce. It's you. You have to master yourself. You have to be disciplined enough to master yourself. And a lot of these words will fly over everyone's head, but trust me, if you are strong enough and patient enough to really stick to your plan and trust your edge, you will become a profitable trader. Becoming a profitable trader isn't a thing where you are one. Every day is a battle to become one. Okay? Every day you are testing your discipline on a day-to-day. It's you versus you, and it's how you can control your emotions. And if you can do that on a day-to-day basis, yes, you earn the right to call yourself a profitable trader. Hope this helped, guys. Smash that like button, subscribe to the channel, and I'll catch you all in the next video. Hopefully, you will see me in the next video with that certificate, that payout certificate, and with that plaque as well. So take care for now, guys, and I'll catch you all in the next one. Peace.